Hello and welcome to Pro Trader Strategies Market Commentary for Monday, February the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had some economic data in the form of flash PMI here and across the pond. Most of those data points came in line with expectations and slightly above 50, which is an indication that there is still some expansion in the overall economies here in the United States and abroad. We will have to wait and see what the Institute for Supply Management is, which is the ISM PMI, which is the Purchasing Managers Index, and that will be the real number that most economists and traders are looking at. This is kind of a precursor to that, so keep that in mind going forward. Having that out of the way, we had a webinar on Friday, went off really well, and so today I've gone through and tried to put on several different types of iron condors in line with that webinar. With that webinar, I talked about my rules and things of that nature that goes into building this iron condor. And with this rally that we've had today, we're seeing a lot of this volatility come out of a lot of these underlyings. Therefore, I wasn't able to really fulfill all of my rules to this strategy. One of the caveats to that is I like to get a third the width of the strike on these strategies when picking the 16 delta. And I wasn't able to get quite a third the width of the strike on a lot of these, but I wanted to put on several different occurrences in order to have a strategy actually go against me, because this is going to be a three-part series. This last Friday's webinar was on iron condors. We're going to be doing one this Friday on the iron butterfly, and then we're going to wrap it all up and tie it all back together on another webinar where we're going to be doing it on defending this iron condor and what we do when this strategy goes against us. So I looked at it as I needed to put on several different occurrences to increase that probability of, believe it or not, one of these strategies going bad on me. So I did that to try and make sure that hopefully happens for at least one of them, or maybe a couple of them, so I can show you different ways to defend this strategy when it goes bad. But I'll get into that here in a minute. This is the NASDAQ, E-mini NASDAQ /NQ. As you can see, we're up about 62 points on the day. And again, when the market rallies, a lot of volatility comes out of the underlyings. So that was the big problem I'm seeing there, especially from the viewpoint of selling premium in these strategies. As you can see here, this is the E-mini S&Ps /ES, and we are right up against this value area. And the value area is going to act as resistance. This is going to be a resistance zone, if you will. Now, I've talked several times about the resistance is about 137. So we've just pushed above that. It's been going back and forth. It's kind of a battle right now of the bulls and the bears fighting over that support resistance area. As you can see, the E-mini S&Ps are up about 24 points right now. And this is a breakdown on the as a 15-minute segment for the daily charts, and this is showing that we are right up against another value area, which is a more concise value area. It's not as broad as my 137 area, but as you can see, we have pushed above that 137 and are right in this value area resistance, if you will. It's going to act as a support and resistance. Once we get above it, it's going to act as support for the bulls, and once we get below it, it will act as resistance for the bears, so in their favor. So that's what the bulls and the bears want to see happen. Now, on to the trades that I've done. This is Yahoo, which is the ticker symbol YHOO, and I put on a trade in here, which was the April 35-37 call spread for the upper wing, and then I did the April 26-24 put spread. That creates the defined risk strategy of the iron condor. Altogether, that is an iron condor, and I collected 50 cents for that strategy. Like I said, I would normally like to collect about 60 cents for that, or a third the width of the strikes. Wasn't able to quite do that. As you can see, volatility has started to come off quite a bit in Yahoo. Now on to Yum Brands, which is ticker symbol YUM. I had on the April 82.5 call spread with the 62.5 put spread, and I collected 58 cents. So, still, again, not quite the third with the strikes. Something like a $2.50 strategy. I'd like to at least collect somewhere around 80 cents for that. Wasn't quite able to achieve that, but like I said, this was more of a way to get these strategies on in order to be able to defend that. But these strategies still look pretty good on a trending sideways type of scenario that we're looking for this strategy. So that's one of the reasons, they did fit a lot of my parameters on this, where it looks like they're going to be sideways trending. I've gotten a good width away from those where the underlyings are trading, just not always getting quite the credit I would like to receive for those. And most of these strategies, I did them right around that 20 to 16 delta, where I'm getting short either the calls or the puts, like I talked about in this webinar. And this is Walmart, which is the ticker symbol WMT. And again, as you can see just from the chart, it has been trending sideways pretty nicely. And in Walmart, I actually did this in 2 separate months, and I also did the March 68-69 call spread with the 62-61 put spread to create that defined risk strategy. And as you can see, the 68s are above here, where that's going to act as resistance several times, and the 62 down here for the bottom band of that came in really nicely, with looking like a sideways trending market and having nice support and resistance like I talked about in that webinar. Also, I did the April 72.5 call spread with the 57.5 put spread, and I collected 45 cents for that. Again, not nearly the credit I would like to receive for that, but I was trying to get on several occurrences. I actually got filled on the April right away, believe it or not, because I probably didn't collect very much credit, and somebody was willing to take that on. But as you can see here, this volatility just coming out of all of the premiums. So I'm a little bit happier about that March strategy than I am the April part of that strategy, the two condors. And then I went into XOM again, did the same thing where I did it in the March and in the April. And with XOM, XOM is Exxon Mobil, so the ticker symbol is XOM. And I did this with the March 88.5 call spread with the 78.77 put spread, and collected 26 cents. So again, about a quarter of the width of the strikes, not quite the third that I'd like to see. But then I went out into the April and did the April 92.5 call spread with the 72.5 call spread, and collected 56 cents for that. Again, not super happy about the credit I received on those, but those were in line with the deltas and everything else that I had in order. So again, with that being the 57.5 or the 87.5 on the upper band, and getting the 78s down here below this area right here, which should act as support as it did just recently. So I'm hoping it will stay within those bands, but if I get tested or it goes through me a little bit, then I will be able to use this as an example as to how you are going to defend that, to keep that dream alive and to still make some money on that. Now, one trade that I talked about that I did before The webinar on Friday was in Adobe, and Adobe really came in nicely for me because I was able to collect right around that third the width of the strikes that I like to collect. And I did it in the April, and I did the 90-95 call spread and the 70-65 put spread, and I collected a total credit of $1.24 on that. So that fell in line with all of my rules for it for the most part. And right here on the upper band, the 90s should act as resistance, and then I was able to get below the 52-week low of 70. So that one was why I went ahead and fired with that one, because it just fit the book perfectly as to what I would look for in a iron condor type strategy. So those are all the trades that I put on. Stay tuned, and I will be going over these and talking about these in regard to that webinar and how to defend these going forward. Check out ProTraderStrategies.com and find out all the rules and all the things that I follow and look for this iron condor. Get ready for the iron butterfly and the following one of the defense of these strategies, because I'm going to tie them all together, so they'll be really good ones for the entry-level trader, somebody that doesn't have a lot of money in their portfolio and doesn't have a lot of means to be able to just kind of do naked strategies, or the trader that has kind of gotten away from these. A lot of traders that have been around for a long time get away from this iron condor, and it is still a very great strategy to have in your portfolio. Plus, you have to have a lot of different types of strategies in there to get a well-balanced portfolio. All right, that's all I got for you guys today, other than if you can't take that, take it easy.